market trends are two of our senior market analysts, Walt Hackney and Doug Jackson. Gentlemen, welcome back. All right, Doug, let's talk about this. Let's start with the soybean market, where there's always seems to be a great deal of interest, and especially this week with the 26-cent rally on the nearby bean contract. Is this the beginning of something, or is this merely one last shot to make some sales?
Well, Mark, we have an interesting situation where we have dry weather that's still a persistent problem in the southern half of Brazil, basically. Interestingly, last year, the final bean production number in Brazil ended up over 8 million tons smaller than what the USDA projected in February. So even though the market would like to think the crop has been put to bed, that the crop is made, that there's no problems, no potential for problems, the fact is that we still have about 30 days to fully develop the crop in Rio Grande. Some people were talking about losses in Paraná. And again, it all comes down to a 10-day dry weather forecast that could see some crop deterioration there. So the market's scared of that. We don't think there's going to be a major problem at this late date. The weather's still been very good. Argentina's perfect. Northern Brazil's good. But with the funds as short as they are, holding a record short position of beans and products, and needing to bull spread out of those positions and move to the May contract here in a very narrow 10-day window, we may see this bull spreading, tight farmer holding, and the prospects of some deterioration in Brazil give us a rally into next week. Although interestingly, after our rally this week, we were starting to see relatively heavy farmer selling even into the weekend. So I think any kind of a rally is going to be timid and met with increased farmer selling both in North and South America. That South American producer has over 1 billion more bushels to sell today than a year ago.
Wow, so keep that in mind when it comes to making sales. Let's talk about corn, Doug, and we look at what's happening. Our USDA numbers are out this week. We got a better picture of where the crop was for 2004 worldwide. What's ahead now as you look at this corn market? Potential shift of maybe some additional corn acres this year with the Asian rust.
We think it's successive supply-demand reports throughout the spring and summer. We're going to continually lower the demand numbers, Mark. We're going to see a lower feed number probably eventually, certainly a lower export number. The old crop stocks could be closer to 2.2 billion rather than the 2 billion forecast in the supply-demand report. But the key thing is going to be summer weather as we make this transition. The funds bought 25,000 contracts of corn Thursday. We had a 3 or 4 cent rally. Again, a big fund buying spree runs into farmers selling immediately. And I think we're going to continue to see that. There's not a great prospect for corn prices here, Mark. We're going to go sideways in a general sense until we can really start trading summer weather. If we have average crops, average yields next year, prices will go moderately to significantly lower. If we have a weather problem, of course, then we can certainly spook the funds out of this large short position that they've still got. But we're going to have to get out into the summer. We're going to have patience, and then it all comes down to simply a weather and production bet. There's not much going to happen on the demand side that's going to change the picture in the intermediate run.
Let's talk about the wheat market, which has been interesting. Has seen some a little bit of a rally here in the last couple of weeks. This wheat picture doesn't seem to be all that tight, Doug. What's driving that?
Well, we have a relatively mediocre set of crop conditions on the soft red wheat as we go here into the growing season, but we also have some of the best hard red winter wheat crop conditions we've ever seen. We have about 90% topsoil and subsoil moisture adequate in Kansas and Oklahoma, a radical departure in the weather pattern. We think we could have a record yields in many states this year. We think we could actually have a total crop this coming year that could be large enough to build stocks with this record yield and low acreage abandonment. China will buy less next year. We think we have prospects for a big crop in Europe, big crop in Eastern Europe, prospects for a better crop in Canada. So while we're still, of course, a function of the weather as we move into the summer, right now it looks like another large world crop, another large U.S. crop, and that's really going to limit the potential, again, much like the corn, in the wheat, unless we find a significant weather problem. And really what will drive wheat prospects is going to be Eastern and Western European production situation, and right now they look pretty good. So not much upside there, with the potential to trade maybe 30 cents lower into harvest if we have normal weather.
All right. As usual, good analysis. What's happening on the grain front?